Hey guys, it's Alon here. Welcome back to another week here at AcornProductions. I do apologize this week, I'm a few days late. I have actually started a new job and haven't exactly had time for the past 2 days. That's not an excuse, I won't let it happen again. Now, we're about a week into February, which is a new month. If we quickly check out our stats, you'll see that January finished off here. It was probably one of our worst months besides August last year, but as you can see, we've had a really good 3 months to finish off last year. And essentially what happened is we gave away a bit of the profits, a bit of the ones that were doing really well. Honestly, just kind of attracted a little bit, came back to a more reasonable price. Some of our holdings, for example, like Coinbase at one point were double this percentage. They had almost doubled. I was thinking of taking some profits, but I really wanted to stick to the strategy and one of the rules that I had implemented, where you don't touch the portfolio only every 2 months. So for example, at the end of January was the end of the 2 months. So I do kind of want to stick to the rules. If this continually becomes a habit where maybe shaving off the profits at a certain amount is a good move, I don't know, because sometimes it works one way and the other time you'll shave some profits and lower your earnings, so I don't want to just implement new rules like wishy-washy. I do want consistency. That is important to me, and I want to stick to the rules that I make. So that's kind of the reasoning behind there. We've rebalanced the portfolio a week ago, so you can see Tesla was down, so that's why the invested amount is lower than the current amount. We've added more to top it back up to the 16% of the portfolio that we wanted at, and you can see all of these different holdings. And in general, I was thinking of making some changes, but to be honest with you guys, I'm quite proud with our 20 holdings at the moment. I think these holdings are going to have a good year. I think crypto and in general, a lot of these companies that we're holding are going to have a good year. Crypto has a lot of things going for it at the moment. There's a Bitcoin halving, there's a lot of ETFs and such being approved. My only concern would possibly be a market crash, but I'm not a prophet. Nobody knows when the market's going to crash. There's no particular reason it might crash this year, but if we are in general kind of overdue for a crash, they do seem to happen in kind of like these cycles between 10 to 15 years. And we've been in a really long bull market, so who knows when it's going to happen. So the reason I'm bringing this up is not to scare anyone out of investing, but just to put a bit of focus that we do need to remember that normally a crash happens when nobody thinks a crash is going to happen, and typically also when things are going too good. So we need to remember that yes, our goal is to aggressively grow wealth here, not necessarily through dividends, but through appreciation. And we do need to identify that preservation of capital is important. So we do need to protect ourselves from a big crash of, let's say, 40, 50, 60% that would wipe out our capital. That is definitely not something we want, and something that I'll be keeping in mind for you guys. Now, for those of you copying, I appreciate. For those of you tuning in, if this is your first time, welcome. If not, welcome back. I appreciate all of you. I hope you all have a wonderful day. I'll catch you all next week.